Hi everyone, my name is Ara and I'm with ACap Advisors and Accountants. I'm here today with Matt Christofuli, a partner at ACap as well. And today we're going to go behind the blog and talk about some of the questions that we get from our clients and to delve deeper into those questions and to hopefully answer them and to give you some more clarity. And today's question is, what is better, to get a tax refund or to pay during tax time? So Matt, what do you think of that?
I would say, without a doubt, it's better to owe a little bit at tax time. And let me clarify. When you get a refund at the end of the year, you're getting your own money back. That's why it's called a refund. This is not money that the IRS or the California Franchise Tax Board or whatever state you're in is giving you back. It's your own money returning to it, hence the word refund. So basically, if you get a large refund or any refund at the end of the year, the IRS is like, great, you didn't owe as much as you thought you owed, so we're going to give you your money back. I prefer to have my money throughout the year in my pocket, doing what I want to do with it, not waiting until the end of the year to let the IRS give me a big chunk of it back. That's how I think of a tax refund. There are some situations, perhaps if somebody has trouble with budgeting or expenses and they use that forced savings component of tax going to the IRS to maybe fund their IRA every year. They're expecting a refund. They use a portion of it to fund their IRA, or they use a portion of it to build up emergency savings or make home improvements. We've come across a lot of people who have this sort of philosophy, and every year in March or April, when they get a larger tax refund, they make those home improvements or set it aside for something else because of the fact that throughout the year they've had issues saving to kind of meet those short-term goals.
That's a great answer. And I think as a follow-up to that, leave it to the IRS to come up with a bunch of different forms. And people always get confused. What is the difference between a W-4, a W-9, a W-2?
Right.
How do people make those changes to change their estimated tax payments or make their withholding payments? And which is the proper form to use when they're doing that?
That's a good question too. So if you're an employee, you work for a company, you use form W-4, update your withholding elections with your employer, and then you can either increase or decrease how much is withheld from your paycheck every 2 weeks or however often you're paid. Then that should be sort of based on what the estimated tax would be come year end. If you are self-employed, none of those forms really apply to you. You make estimated tax payments. And estimated tax payments are due quarterly. Rather, they're due 4 times a year, in April, June, September, and then January the following year. And that is what that's the mechanism for a self-employed person to pay their estimated tax liability. So if you are self-employed or you report income and expenses on Schedule C on your tax return, or you're sole proprietor, there's a number of terms for it. You're on the hook for taxes even though no one's coming to you and saying, hey, give us money, or taxes aren't being withheld. It's still up to you to make those payments 4 times a year. And if you don't, then you're going to have a really rude awakening come April when all 4 of those sort of quarterly payments come due in the exact same amount that would have been due had you paid them quarterly.
Those are some excellent points, Matt. And I guess the bottom line is, if you like giving free money to the government and an interest-free loan, then get a big tax refund. But if you want to keep some of your own money in your pocket, then owe just a little bit, enough to avoid the penalty at the end of the year.
Absolutely.
So that's it for our ACap recap. Thank you for joining us, where we go behind the blog. And if you want to learn more, please visit us at acapam.com.